When you have an LLC and you're this only owner, you end up paying a little bit more taxes than if you were an S corporation. What people forget is that if you're an S corporation, you need to take a salary and a reasonable salary. You cannot take $100 as your salary. You need to take a salary because those are starting to be popping up.
Are you ready to transform your life? This is a no-nonsense show helping immigrants like you create generational wealth, even while working full-time. Get ready to take notes. Here's your host, Saket Jain.
Welcome back, my Great to Wealth listeners. Today, we're going to be talking about a subject that's most dreaded, getting in trouble with IRS. We have here today Claudia Moncarz, who actually has developed a whole practice. She's a tax attorney who's developed a whole practice on helping people getting out of trouble with the IRS. Hopefully you don't get into trouble with the IRS. But what's more important is if you do get into trouble with the IRS, how do you get out of it? Or at least who do you talk to who can help you address things so that they can do that? Now they have, Claudia and her team has negotiated with the IRS to reduce over $3 million in taxes and penalties on behalf of their clients. So this is the person that you probably should listen to. So tune in, make sure to take good notes, and let's go from there. Claudia, thank you for taking the time. I appreciate it.
Saket, thank you for having me. I appreciate it. Thank you for letting me speak to your listeners and teach them about or talk to them about taxes. I know it's scary for everybody, but I'm a certified tax geek, so I love talking about it. So
hey, that's good. We love having tax geeks so that you don't have to worry about it. You can tell us what not to do. Claudia, what we'll do is we'll start the conversation usually with kind of like trying to understand your journey, your migration to whatever you're doing. How did you become the person you are right now? So could you give us a little bit of background about you?
Yes. So as we were talking before we started the recording, I'm originally from Panama. I was born in siempre se dice Panamá in Spanish. It always comes out in Spanish. I was born in Panama, Panamanian parents. My family goes 100 years, but my mom came to the U.S. to study, and then we stayed here, and I went to law school here. And my first year in law school, they know I worked for a criminal judge, and he knew I didn't want to do criminal law, so he sent me to different divisions, and I ended up liking probate, and I wanted to do estate planning. So I was going to be a estate planner. And when I went back to law school, I'm like, I'm going to be a estate planner. And my professor says, no. If you really want to do that, you have to take a tax course. So I ended up taking a tax course, and I loved it. That's the only one that really made sense to me. Like I did well in law school in the other courses because I guess I memorized well and I could regurgitate it like the professor wanted to. But this one, I actually understood it. And I think that's when you do best your work, when you understand the reasoning behind it, because you can really get creative for your clients and really come up with really good solutions for your clients.
Right.
And the irony of it is that in my maternal side, both my grandparents were CPAs, so I guess I was meant to
Nice.
make numbers.
I was going to ask you, so why did you pick the law profession? Kind of like what drew you into becoming a lawyer?
It's in the family, mostly lawyers and doctors in my family.
Oh, okay. So you're a typical immigrant who wanted to be a doctor or a lawyer or an engineer. That's awesome. That's what I was looking for.
Yes. The third one is engineers. We have a lot of engineers in the family. Like every immigrant family.
I can relate to that.
Like one of these three.
I can relate to that. Yes. Well, at least it seems like you enjoy the work. So that's good.
I generally do. And I'm glad I found something that I love to do, I'm passionate about. And I appreciate being in this podcast because I'm passionate about helping our community or our immigrant community and helping them, because I think it's hard for them, especially when they come older. It's hard for them. They're the most brilliant people, but it's hard for them to understand the laws here, the taxes here. Correct. And it's way different from our countries.
No, it is. It is. Like I grew up in India. So if I were to think about it, when I came here, I had no idea how things work, how entities work, what's an LLC versus what. I had no idea. And I come from a business background. My dad had a business. Mm-hmm. So it's not like I don't had any background in it, but I just didn't know how the laws work. I didn't understand how the taxes work. I didn't understand how money worked in this country. It was a very interesting switch. And I can only imagine if all your life you've come in here as an immigrant and all your life you struggled to kind of find security and safety for your family, you don't have time to understand these things, right? You don't necessarily, because these things are complicated and you have to go deeper. You can't just stay at the surface. If you want to use them in your favor, you have to really understand, or you can get into trouble a lot, which is what we're hoping people don't get to trouble. But of course, we have you now. If they do get into trouble, they can at least have a conversation with you to try and see what they can do.
Yeah, and I think it's also the two biggest disconnects that we have that I've seen is that one, in the U.S. there may be one or two more countries that taxes you on your worldwide income. And we all come with the knowledge that we only get taxed with what we do in our country. So a lot of people forget what they have in their countries or any money or any business they may do it. That's one. And the other one is that for the most part, in other countries, you don't pay taxes, no big deal. You just kind of like pay a fine and it goes away. But here, it could get to the level of criminal. It's really hard to get to the criminal division in the IRS, but it happens and they take it seriously. And at the end of the day, the IRS is like a collection agency, right? It is what it is. That's their mission statement. Collective most amount of time in the fastest time. Right. Most amount of money in the fastest time. But that's what it is. So it's a whole collection agency that we don't see it in our countries. So I think those are the two big disconnects that get people in trouble.
So I think, Claudia, for your practice, I'm assuming you approach it two different ways. One's reactive. The other one is proactive, right? Reactive would be, I, as a business owner, did something inadvertently. I did not know that I had to do something. Now in front of the IRS, fighting an audit. And that would be reactive at someone like, hey, Claudia, I did something. Can you help me get out of the mess or at least help me resolve it? The other is going to be, I don't want to get into trouble. What do I need to do from a planning and a strategy perspective? Can you help me organize that? How do you kind of define your clients?
Like I say, it depends on where they come and where in the process. Sometimes it's a little bit of both because, yes, sometimes, and these are the minorities, they come to you before they even start anything and in your part, they're planning. So most of the times they come when they already have things set up. But they haven't gotten in trouble with the IRS or they have no audits or no collections. So sometimes you have to undo things to make them fit because it also has to do with, are they here permanently? Or do they have assets abroad? It's not a one solution fits all. So you really have to tailor it to the client. And then there's a part when either they reactive, like you said, either they're in an audit and we help them with the audit and we work them through the process and get them all set up with the right structure after. Or like sometimes you just make an investment and because it's your passive investment, you didn't plan for it. And all of a sudden you have a big bill and you're in the collections process. So that's also in the reactive. So that's where we help them out in those two areas.
I love that. So let's define a term here. I think we've used it in the last few minutes a lot. Getting into trouble with IRS. What does that mean?
Well, it means like when you start getting those letters, right? It is scary. I have to admit it, even sometimes, I get them all the time from my client, but I have to admit when I see my name on it, I even pause for a second. So getting those letters, I understand scary, especially for immigrants, especially scary. The one thing is that we all take seriously the IRS, so that I think.
Correct.
So when you get that letter, that's getting in trouble with the IRS. And sometimes that letter is not bad. So you should open that letter because a lot of people also don't even open the letter. I have friends that come to me with stacks of letters and open letters. Yeah, and they miss opportunities because sometimes the letter may say something like, you made a mistake in your tax return, so we're fixing it for you.
Correct.
They may say, you didn't report this, and this is how a lot of audits happen, actually. They don't report the 1099. They forgot some document that they didn't report, some income, so you need to fix in your tax return. So that's how it happens. Getting in trouble is that when you get that first letter. That's when the process starts. Mm-hmm.
Got it. Claudia, let's focus on one thing here, right? Kind of like proactiveness. Like we want our listeners to be proactive and kind of make sure what doesn't get into, how can they avoid even having the conversation of receiving that letter, right? So the tax planning and the tax strategy piece, if you were to think about that, how do you approach that for a different client? Because your client base is pretty broad, right? They're not all real estate investors. They're not all business owners. They're all over the place. And everyone's strategy and plan is very, very different. They may think they're unique and there may be elements which are unique. A lot of that, there's going to be commonalities and there's going to be a lot of uniqueness about people's plan. So can you elaborate on that a little bit?
Sure. So the majority of our clients are business owners, whether they're in real estate or not, they are still business owners. And I think it all depends. First, you create this, and you can create your structure. And the most common that we all know is the LLC. Mm-hmm. But with that said, you have to think about what are you here? What is your status in the U.S.? Correct. If you're here permanently, if you're not, that comes into play when you with your structure. Also, if you have partners and what is the type of investment, the amount of the investments. If you want to be proactive, I think first is to really sit down and think about how are you going to structure this business, right? Or investment? Because even if it's an investment, I still think it's a business. Maybe it's not an active business, but it's a business. It's a passive business. So you want to think about, okay, who are going to be my partners? How much I'm going to invest? What I'm going to invest in? And then when you have that, then you can kind of decide in how is my personal life affecting all this, or how will it affect my personal life? Because sometimes maybe you're in a high risk profession. So that means that you kind of need to protect your other investments, your passive.
When you say about protection, kind of like what you're thinking about, how does it impact your personal life? What you're specifically talking about, what's the amount of asset exposure you have in case somebody sues you? Is that what you're saying? Yeah.
Correct.
I think that makes sense.
Because even if it's just real estate, sometimes real estate can open us to other, or the other way around. If as an attorney, somebody can sue me and then it opens up to my other investments.
Correct. They just need one entry point, right? And there's a very high likelihood you may not intentionally make a mistake, but especially with the real estate, somebody may slip on your property and you're screwed. That's all it takes, right? So you really have to be proactive. I really believe that the tax strategy, the asset protection strategy, the estate planning, they actually are the three-legged stool, and they all have to go together hand in hand. You can't just go to a tax attorney and say, create my tax efficient structure, but not talk to an attorney, not talk to somebody who understands the estate planning and also the asset protection piece. These all ideally, like in your case, I'm assuming because you had a passion for estate plan, you actually understand that. That's a very helpful thing, right? And as an attorney, you also understand the legality of it. So getting that structure created by a CPA is very different than getting it created by a tax attorney.
Yes. I mean, the CPA can form your company and they can give you some advice of whether you want to have an LLC or a corporation. But a CPA, when I tell you, for instance, I'm in Florida, and if you want an LLC, you ideally want 2 members. Because then that gives you a special protection in Florida that's called charging order. And that makes it really hard for somebody to get sued. So, I mean, but the CPA can give you more of the technical stuff. I generally believe that one of the first things that you do once you have that plan done is that you create your board of mentors or your board of trustees. You should have a good tax planning CPA. Yeah. It's not somebody that does returns, somebody that's going to help you project. You should have a good attorney. And sometimes you may want to have at least a good backup insurance agent to tell you some advice. I know they're costly, some of them, but it's an investment. If you're putting an investment in real estate, you need to make sure you have the right team to back you up and give you the advice to make this long-term, to create a legacy, because that's how you scale, so you create that legacy.
Mm-hmm. So Claudia, give us some broad stroke structures, right? Kind of like, we won't talk anything specific. We'll talk in generalities. The top 2 or 3 structures that you can think of, which a lot of people should start as a starting point. And I want to put a huge disclaimer before you say that. We're not giving anybody the tax advice, the tax planning advice, the estate planning, the financial advice. This show is not meant to be a personal financial advisor. All we're sharing is our opinions, are some of the best practices. Your specific situation may be completely different. What have you heard so far and you will be hearing on this show? Just make sure you apply your own discretion on it and get the proper financial advice from somebody who is on your side and understand your specific situation. Sorry, Claudia, I had to make sure I say that before we start going there. I mean, you're an attorney, so I'm sure you would have added a huge disclaimer to begin with.
Yes, like you said, this is just like a starting point for you, just to get you thinking, to the listener. And I think what most people are more familiar with is the LLC. Mm-hmm. And that's what most people have. But then also a lot of people are not familiar. Like, maybe I don't have to create it where in the state I am. There's states that you can create it, but maybe I want to create it here. So the most typical one is the LLC. That's what everybody's familiar with. And that's the most simple one. And now it's one of the oldest, creating an LLC. But sometimes it depends on the asset. Maybe you can do a DB. It depends on the investment amount, I want to say. Mm-hmm. You can do a DBA and get an EIN for the DBA. That way you don't have to put it on your individual name, but you don't, kind of like a sole proprietorship. Right. If it's a past, you can kind of do that too. So those are the 2 most common ones. And I think it really is trigger on the amount of the investment. And the other important thing, and hitting back on being the reactive, how you avoid an audit, is having good records. Make sure you have good records of all the deductions that you take. A lot of times our accountant then tells us, oh, you have this business, even there's a passive, you can deduct certain things. But you have to have records, because a lot of times I'm in tax court And it is an audit that went wrong and they didn't have the records. And we just finished a case in which they transferred money through PayPal and they just didn't keep the records of, they were getting 6 figures and then transferring the 6 figures, but they were not keeping the records. So it was something that they didn't make income, but they still end up in taxable because they didn't have good records.
So Claudia, what does having a good record mean? So let's say I go out to dinner with a friend of mine, colleague of mine, I should say, or a client, which is a business dinner, and I ended up spending $20 or $100. So what are the thresholds for these receipts? Do I have to keep every single receipt for every single dollar that was spent out?
Yes. And one of the big misconceptions people make go, oh, it's in my credit card statement. I'm good. No. And now there's so many apps, it's not even funny. You take a picture of your receipt and then you can throw it away. But you need the actual receipt for an audit.
So it doesn't matter the amount you have spent. You could have spent $1. If it's a business expense, you just get into the practice of...
If you want to deduct it, you need the backup in case of an audit. And also for mileage, a lot of people, they take the mileage. Well, a lot of people take the car expense plus mileage. You can't double dip. That's another big mistake I see. But if you're going to take the mileage, just record. I'm old school, so I use an actual calendar. But now there's apps. There's
tons of apps. Like I know I use MileIQ. It automatically tracks it. It automatically tracks it.
At this point, there's really no excuse not to have a log. And you put in there, I went to see who I went to see. We talked about just like a snippet. So you remember, because you're not going to remember when the audit happens 2 years from, because the audit will happen between two to 3 years after you file your return. There's no way that you're going to remember. That's 3 to 4 years after it happened. So you have your records and you can tell them and
What's your recommendation on getting organized on receipts? Do you have an app that you like?
For my business, we take screenshots and we keep it on our personal server. But there's, like I said, I don't know if MileIQ does it. There's Expense. I think there's one called Expense where it keeps that one for you too. There's now apps that even go through your Gmail and they pull receipts out of it too. I mean, there's everything in there. So I think that,
the challenge, I can see that being challenging because nowadays when you pay for something, especially when you're paying, they ask you, do you want a phone receipt? Do you want an email receipt? Do you want a printed receipt? Right? And it can get complicated depending upon if you end up picking phone or email or print and you don't have a consistent way of doing that.
There's something called SaneBox. And it's amazing. SaneBox is organized.
Sane, like SANE, SaneBox.
SANEBOX. Yeah, SaneBox, like Sane. Yeah, and it connects through to your Gmail and it puts it in little boxes. It organizes your email for you. It connects to your business email too, and is the best thing. And you can put like anytime I get a receipt, it goes in there. I think Gmail, you can put things like that. So if you want to do it the easy way, I'm always a believer, the less friction, the most likely you are going to be organized. Then just make sure every time you send my receipt, send it to your email. And the other big thing is don't commingle. If this is your business, you're not going to pay your groceries from your business. You pay your business meals. And if you need to pay groceries, go to the ATM, take money out and pay the groceries. Because this is the other one where then the courts don't respect it. Because you're not respecting your business, the court is not going to respect your business.
Yeah. And how does that work for the cash? So Claudia, let's say I have some cash transactions, right? For whatever reason it is. How do you track those?
A bookkeeper. I forgot to add into my list that you need a bookkeeper. You're never going to do your books. Unless you love doing books, you're never going to.
And I can attest to that. My December 31st is crazy.
No, but I mean, I understand how to do books. I understand how to do tax returns. I don't do either one of those.
Yeah. I mean, part of that is it's not worth your time, right? Because the amount of time it takes for the books is just, you can go hire you can go recruit another client.
If you want to think about it, I left the first couple of years in my business. I'm going to do it myself because I know my books. I know how to do, but I spent like 2 horrible weeks before taxes trying to put everything organized. So once more,
correct.
I think you should know yourself and know your limitations and what you're not good at and just accept it and go the frictionless way. I've yet to meet a business owner that loves doing bookkeeping. None of them. Not even accountants. Accountants, they even have somebody that does the book for the firm. So
it is so funny. I asked my accountant recently, can you do my books? He's like, suck it. No. Oh my God, darn it.
But now there's so many, there's bench.co, there's I mean, it's just so easy to do your books. It's not even funny.
Right. Claudia, help me understand. One of the biggest resistance point that I hear often is if I'm asking somebody to do my books, they have full visibility into what I make, what I do. Is that exposing me to more risk? Or if somebody were to audit it, because there may be an honest mistake on how you did your books or how you did classified your expenses, or now your data is with somebody else, right? That's the biggest fear, especially in the minorities, right? When you're coming here, trust is not common in where we're coming from. You have to be very, very careful. So how do you help them address that?
Well, one of the big things, I mean, I think you first have to remember, first of all, with that, just addressing that, you can give your accountant just like accountant access to your bank account. They won't be able to do any transactions in your account.
Sure.
They won't be able to do any transactions in your credit card. So you can give them a minimal access so that they can do your books, right? Okay. And yes, and this is all, the only way you can grow is you need trusted advisors. And the key word is here, trusted. You need to be able to trust, because you're not going to do it by yourself. You're not going to do those books. You're not going to, yes, you're a brilliant individual and you can probably read a lot of things and figure out how to do your books, figure out how to maybe go buy a form, hopefully not from LegalZoom, and don't do that. That's a great client for me, the referral partner, LegalZoom. But you can do all those things. But at the end of the day,
did you just say that do not use LegalZoom, or did you say use LegalZoom? Do not.
I joke that they're a referral partner because people don't give you all the details, and I end up fixing whatever they messed up.
Oh, that's why you said referral. That's what I was trying to figure it out. So I see what you're saying. Yes. You're fixing all their mistakes. Yeah. Yes.
Or sometimes people, I think it's worth the investment, because if you then have to hire the attorney to fix it, it costs more. If you have to hire the CPA when taxes is there and because you need your books, they're going to charge you more to fix all your books, and except if they were doing it throughout the year. And the big thing is that how do you find a trusted advisor? Sometimes you have referrals, which is great from your friends and community, but you also have to have, I think, a gut feeling, especially like you have to feel that, because I've sometimes seen with tax preparers that they don't get the best advice, or I've seen some of them say that we start from zero up. No, that's not how you start a return. So you have to, I think you get in a gut feeling when they're telling you something that's not correct, and you just have to follow your gut as well.
I think you have to understand it enough to ask intelligent questions, because my firm belief is the CPA, the tax accountants are not there to save you taxes. Their biggest claim to fame, most of them's biggest claim to fame is none of my clients got audited. And to your point, getting audited is not bad as long as you have the documentation to support it, right? And they're not there. They're trying to always be very, very conservative, because I see a lot of my friends and my family members or my investors coming to me like, I don't think I can take that claim. I'm like, why not? Because my accountant is saying I shouldn't do it. I'm like, how much research have you done? They're like, nothing. I'm like, just read up on it. You have to read up on it yourself. Just because somebody's saying no, you have to understand they may be right. They may not be educated on that specific thing, because tax law is complicated. They may not have that client base. You may be a real estate investor and you're talking to them questions about cost segregation, bonus depreciation, and they have never dealt with a real estate investor in the past. It's not their fault. You may need a different CPA to give you recommendation on how to do that, how to get a rep status, and who should not get a rep status, even more important, because that opens up your audit possibilities. I think these are the questions. You just got to make sure, to your point, a trusted advisor, but more importantly, a trusted qualified advisor.
Correct.
Right? Just because you have an advisor doesn't mean they're qualified.
Correct. I think also that you need to know your risk, because a CPA and sometimes lawyers, they're more risk averse than business owner and investors. I think in law school, they ingrained into us that you can't say the wrong answers. So
you are right.
They ingrained that in law school. So every time I'm in my business, I take off my lawyer hat, because if not, I'm never going to grow my business. But in tax, there are certain things that it depends on your risk tolerance that you can do. Right. And you can do more risky things and take some deductions. And there are certain things that you do just to put the hours, but maybe a CPA won't tell you if they have a low risk tolerance, right? So you also have to know your risk tolerance. And like you say, know all those things. Get educated, get training. And that way you can also guide your trusted advisors.
So Claudia, what are some of the major things in your tax that can trigger audit? Help us understand those.
One is if you have a C schedule, more likely than not that you're going to be audited. Doesn't mean that you may be doing everything right. It just happens, right? If you report a loss in your C schedule, your E schedule, which is your rental,
When you say Schedule C, you're not talking about if you are an LLC, which is taxed as a C Corp.
Oh, yeah.
That.
No, sorry. Yeah. So, okay, I'm talking about your personal return, right? Your personal return, your 1040. In it, if you're doing your business and if you're the sole owner of your business, you report it still in your tax return, your personal return, if you're the only owner, right? So that's where you get your C schedule, unless you do certain things. And that's not a problem. That's everything you're doing is correct. And you may be taking everything, but then the higher amounts tend to trigger an audit. That's just the IRS algorithms, some things that they have in there. Other things, like you say, your Schedule E in your personal return, and that's for your rental income. And when both of them have a loss, those triggers audit once more. And it, is okay. When you have a lot of travel expenses, that you may have it because you're looking at different properties, but also people tend to have hobbies that they get us as a deduction when they can. Definitely. So that those trigger audits.
And we're still talking at the personal. If all of these are on your personal taxes, chances of you being audited are much higher, correct?
Yes. And that's not bad. You may be doing everything right. It's just the algorithm. True. A lot sometimes when you have car expenses, those trigger audits too. So that's in your personal. So now let's say you do your business. Because
let's hold on just for 1 second. So I think there's something important that you said there. So you said about if you're Schedule C and Schedule E, and Schedule C is your business as a sole proprietor, or your Schedule E, which is more of your rental properties.
But Schedule C can also be an LLC as a single member, because for tax purposes,
disregarded entity. Correct.
Yeah.
Correct,
the IRS assumes disregards it. So
no, that's correct.
So you can even have an LLC. Mm-hmm.
Where I was going with that was the biggest problem is one of the key components you said, the term we used was if it has losses. More than likely, your Schedule E, which is your rental property, if you bought it right, and if it has the depreciation, and if you're depreciating it correctly, it's going to have a loss. More than likely. So you're basically saying, and I'm putting words in your mouth, so I want to make sure I understand that I'm saying it correctly. If you are claiming rental properties on your personal taxes on Schedule E, chances are you are on the audit flag.
Not necessarily. I think it's more with the Schedule C, if you have a lot of losses. Yeah, and sometimes in the Schedule E, they understand, but that may sometimes trigger an audit.
Okay.
It may not, but I think it's more on the Schedule C that triggers that when there's a loss there. Mm-hmm.
Okay.
They'll pull the return. And sometimes because we do this for our clients, we are able to look at their tax records, because everybody has a tax record. Just like they have a credit report record, everybody has a tax record. So we are able to see on a daily basis what they do with our clients. And I've seen them that they pull the return. The audit doesn't happen, but they just pull the return because something flagged it that it should be looked at. So that necessarily doesn't mean there's going to be an audit. The other thing is in this one, and they always say they're going to do audits and not actually seeing them, is a lot of people say, create an LLC and do an S election. And you're going to save taxes, because remember, when you have an LLC and you're this only owner, you end up paying more taxes, like the SECA. Yeah, so you end up paying a little bit more taxes than if you were an S corporation. But then what people forget is that if you're an S corporation, you need to take a salary. Correct. It is very important. And a reasonable salary. You cannot take $100 as your salary. Yeah. And the IRS is not actually cracking down on those. I have friends that do the same thing, and they actually have audits on those. So that's another mistake. So if you're going to do an S election, you need to take a salary, because those are starting to be popping up. What's the reasonable salary? It depends on where you are and what you're doing. Because a reasonable salary in South Florida, where I am, is completely different than a reasonable salary in Boise, Idaho. Right? And Claudia, what if your business is not producing that income? I mean, what if you're only making $50,000 a year in the business because you're starting out? And then you shouldn't make the S election. You should not be making an S election at that point. Right. Yeah, we always see all this like really cool and strategies, but some of them, you're not at the level to be doing those. Because if you're going to do the S election, you need to then take a payroll, and then you need to get a payroll company, because if not, if you don't take it properly, you're all of a sudden got yourself in trouble with the IRS for payroll, even though it was your own payroll. And then you open yourself. Yeah. So, there's cool strategies, but make sure you're at that level and you're willing to make the commitment to set it up right. That is a 100. This is where you can't take whatever we're saying as a gospel and say, I'm going to go implement it. You really need to understand talk to somebody who is proficient enough and understands enough to make sure that, hearing about these are first step.
because you need to hear about it, right? You need to listen. You need to educate yourself. But don't blindly implement it, because your situation may be very different than mine and Claudia's or one of our clients and one of our investors. It's just very different. It's very, very, taxes are very, very personal. And you have to make sure. And also, you know what, one of the additional steps is that there's a whole tendency to zero out your taxes, which, you may or may not be able to do depending upon how you structure it. The biggest problem, which I think, again, that's why you need to make sure all your advisors are talking to whatever strategy you implement, every single advisor, which includes a mortgage broker. Because what if 2 years down the road, you want to go buy a house and you want to get a loan and you zero out your taxes for the last 2 years? You will not qualify for the loan, period.
No.
Right? That's where the strategic thinking is very, very important. And I think people look at taxes as a December 31st activity or April 15th activity. It's a year round. It's really day in and day out. You have to think about it.
Going back to that zeroing out, then what they do is they puff up their income so they can buy the house. Correct. And then they don't have the money to pay for the taxes that's an issue. They get in trouble. Yeah. I actually have a client like that. They have to puff up their income to buy the home. And I was like, I have this big tax bill. I'm like, whatever.
Yeah. No, that makes sense. That makes sense, Claudia.
And the other big thing, which surprisingly enough, is actually file your return. Because if you don't file it, that's going to trigger an audit. That's they're focusing, the IRS actually is focusing on high income earners that are not filing their tax returns. And you know how they're going to know? Because everybody, like, you know how we get a W-2, your employer sends a copy to the IRS. When you get a 1099, that's your investment. If it's a passive, or K1, if it's a partnership, they're going to send that to the IRS. So all the companies have, even now, PayPal, Venmo, Sele, this is going to start next year. If you send more than $600, they're going to send that to the IRS. So the IRS has, so they have all this information, and this is computer. That's the first thing they do. Second, make $10,000. Is there a $10,000 reported in their tax return? If it's not, that's an automatic letter that you're going to get. That's
nothing that completely makes sense, Claudia. This is actually very, very interesting.
They'll find out. We always think they're not going to find. They will find out. Trust. Eventually, they will.
Correct. Actually, before I go there, one question: are people who are filing individual taxes more at audit risk than corporations?
The idea is that they are, and that's just because the manpower in the corporations the agent side to it is less, and they focus on the bigger companies. But I don't think necessarily that's the case now that they have all this funding that the IRS just got less than a year ago. And they're getting the bulk of the funding, even those in years, they're getting the bulk of the funding now. So yes, if you're personal, but I still think that it depends. Like, for instance, like the S corporations, that's something that they're really going into.
Yeah, I did not know about that one. Thankfully, I don't necessarily have an S corp with what I do, which is great. But I did not realize that S corps have a higher risk if you're not getting yourself a reasonable amount of W-2. And you know what? I think I want to talk about that for a second. So just because you're paying W-2 does not mean taxes. Again, you have to structure it properly. You can put a 401k structure. You can put other structures. You have to do it. But then you have other vehicles.
And once more, I'm going to get somebody to do your payroll. You're not going to do it yourself. Yes. You're not going to do it. And now there's with ADP, Custos. I mean, there's
good. Yeah, there's so many cheaper ones. They're not. You don't have to pay arm and length. Yeah.
Yes. So you cannot do your own payroll, because when you're not paying payroll taxes, even though it's for your own money, even if you're your own employee and boss, the IRS sees that as stealing money from the employee. So that's even a whole worse. And I'll take this moment to give. I mean, like I said, everybody makes a mistake. I'm going to own to my own personal mistake. When I started, I was going to be an S corp, and I'm, because, I'm a tax attorney. I'm going to implement all these great things, but I did it. And then my first year, I wasn't making as much. Right. I've been in business for over 10 years. So I wasn't making as much. I will pay myself here and there. And I actually got in trouble with the state of Florida. Because, the states are worse than the IRS. If you have a local, the Department of Revenue local is even worse.
That's true. That's true.
Like, you owe us all this tax. I'm like, but I'm payroll. But I never pay myself payroll. What are you talking about? I never salary.
Right.
And I actually had to get a friend of mine that specializes in state and local taxes to help me out, because I didn't implement it properly. I wanted to do something that sounded really cool because I done it for my clients, but then I didn't take the steps to implement it and make sure that it was right for me. I think I had no business being an S Corp my first year.
Yeah, most people don't.
And also, I didn't take the time to implement it, which is cool. But if you're not going to implement it and any strategy that we talked about here, and you don't make sure that it fits you, then you're just going to get yourself in trouble.
Yeah.
And I'm telling you this from my personal experience when I'm always an advocate, telling you, find that you're in the right, it's right for you, and that is the right time in your business for it.
Awesome. Well, Claudia, we can go on and on. I mean, this is such an interesting topic, and there's so much to learn from people like yourself. So thank you again for coming on this show. We're coming towards the end of our show. We always ended with 2 key questions. The first question is going to be, knowing what you know now, and you know a lot more than what you knew before, if you go back to your 20-year-old self, what's that one insight you'll share with that 20-year-old self which will help make their migration in life more intentional?
I think especially just set aside that fear. I think especially when we're young and somewhat grew up more here, I didn't come as an adult, but still my parents came as an adult, and just trust and get knowledgeable about really not, because knowledge is power. I'm a big believer of that. So get knowledgeable so that you have the powers and the tools, and that way that fear goes away so that you're setting it right for yourself, for your future self.
I agree. I think fear is coming from lack of education, right? That's really where fear is coming from. At least in the financial world, it's really that I don't know what to do. Now, there are other fears. I'm not discounting those fears, claustrophobia, whatever you may have. That's I'm saying
mental, like in the mindset. I'm talking about the mindset, because that keeps you from growing. And I think it's also like, as immigrants, we're always afraid to do the wrong. I think that's ingrained in us to take the wrong step. But it's okay to take, because if you don't take the risk, you're never going to grow. You're never going to grow.
I mean, taking a risk is different than doing something illegal. So there's a fine line. Yes. And you have to make sure you understand that fine line, right? And it's okay to make a mistake as long as you can recover from it. But if you don't even do something because there's a possibility of making a mistake, you're not going to live. Yeah, right? You're just living in fear. So I understand.
Failure is okay.
I appreciate that. Failure is okay. Yeah. Correct. I appreciate that. Next question, Claudia. Where do you think humanity should migrate towards?
To me, I think is community and helping our community. Yes, I think we can help. I guess me, because I'm Latina, I'm passionate about helping the Latinos. And I think we really need to help it. And especially when we get to a point that we made it more, just like show and be an example and bring the rest of your community and show them. And that's why I appreciate being you let me borrow your platform and saying this, because I really think a lot of his information is not readily available. And sometimes you see so many things in the internet and a lot of it is good, and there's also some bad ones. So I appreciated that you had me. So I think, just building a community where we're all learning from each other.
Oh, thank you. Thank you. Well, I really enjoyed this conversation, Claudia. I love taxes. I will never be a tax attorney. I've actually read through the entire tax code, but I did it for me because I need to understand it. I have a trust issue that unless I know it, at least I have an understanding of it, then I can outsource it. But if I don't understand it, I don't want to just blindly believe anyone who's saying something, right? So that's my personality.
But I think that's great. I mean, when you go to a doctor, you read about what's wrong and then you take their advice, but you also know one, so you can ask the right questions. So it's the same
I completely agree. I think that somebody asked me the question, don't ask your accountant, can I take a deduction? Ask the accountant the question, how can I deduct it? You're going to get a very different answer from both of them, right? And then you have to make a determination to your point about, is the risk worth taking it, right? And then you can figure out, if you're trying to deduct $100, maybe it's not worth taking it. If you're trying to deduct $1 million, as long as it's done within a certain constraint, you may be worth deducting it. And that's a very personal question. Your risk appetite depends upon your risk appetite and what is the consequence of you taking that.
And like I said, there's so many things that you can do. And there's so many, to me, it's cool structures that I create. But at the end of the day, it's your structure. So you have to know yourself and know about it so that when you take all that advice, yes, it fits me.
Yeah. Well, Claudia, thank you again for being on our show. If people want to get in touch with you, learn about what more you do, and maybe have a conversation with you, where can they find you?
Well, we have Moncarz, my last name, M as in Mary, O, N as in Nancy, C as in cat, A as in apple, R as in runs, Z as in zebra, law.com. But we also have for your members, your listeners, if you go to www.freeirsguide.com, it's a guide on how to avoid audit and some of the tips if you're in audit, how to get out of it. So That's for, you can go there. Once more, is freeirsguide.com.
Guide.com. That's perfect. We'll make sure we include that in our show notes below. Claudia, well, thank you again for sharing a wealth of information. I had a great time. So thank you again.
Likewise. Thank you very much.
If you got value from this episode, you might consider sharing this content with a friend. But most importantly, be sure to take action on what you've learned. One way you can take the next step is to connect directly with Socket on an investor call. That link is waiting for you in the show notes below.
The content of this podcast is for informational purposes only. Please consult your own advisors when making any investment decisions. Keep listening. We'll see you on the next episode.